Welcome to the Trend November 2011 Market Update. Well, November was really a continuation of what we've seen virtually every month this year in the market. Market activity was at a pace of about 50 to 51,000. November actually a little higher. It hit just about hit 51,000. But with the consistency that we've seen this year running at that pace, we're going to end the year between 50 and 51,000 sales for 2011. That right now we're 7% behind 2010. We're going to end the year between 6 and 7% below 2010 in closed transactions. Prices were also down in November, and year to date our median sold price is about 4% below 2010. Looking back on 2011, we saw the market really stabilize. That is, we saw the normal seasonality restored. We've seen pricing really very consistent since early spring. We did see some price erosion early in the year, but it's been very consistent through then. And we are about 4% behind last year in terms of the pricing. One of the things that impacted the performance of 2011 was in fact REOs. And REOs were around in 2010 and 2009 as well. But we saw a slight increase in the number of bank-owned properties, bank-owned sales this year. We went from about 10% of our total sales in 2010 to about 11% in 2011. Those bank-owned properties also impact the median sold prices. And in fact, without those, we would have gone from $199.9 as a median sold price, almost 10% higher up to $218. And year to date, the REOs for 2011, the median sold price for those is only $85,000. So you can see what kind of an impact they have on the median price when 10% of your sales are less than half of what the typical sales price is. Still, even though we've seen that slight increase in bank-owned properties, our distressed sales are still only a little bit above half of what the rate is for the rest of the country. Recently, nationally, about 28 to 30% of all sales every month have been distressed sales. In Trend, we're running at about 17% year to date. So we haven't been impacted nearly as heavily by distressed sales as the rest of the country. One of the other things that occurred last month, we reported that the FHA ceiling loan limits, as well as the ceiling loan limits for Fannie and Freddie's conforming loans, had been drastically reduced in all 13 of our counties. Around the middle of November, after that report, Congress passed a spending bill that included the restoration of the higher ceiling loan limits for FHA. Fannie and Freddie remain at the lower level that we had reported on last month, but the ceiling loan limits for FHA have been increased. Now, because of that, we're expecting to see an increase in usage of FHA loans for 2012. What happens is, above the conforming loan limit for Fannie and Freddie, it may still qualify for FHA, so that a buyer has the option of either a jumbo loan or going FHA. And of course, the jumbo loan typically is 0.5% to 0.75% higher than a conventional loan in terms of the mortgage interest rate, and typically requires 20% down. So we're expecting that we're going to see in 2012 an increased use of FHA loans. This year, they comprised about 30% of all of the transactions were FHA. REOs also, 62% of all the REO sales this year were cash transactions. That, of course, won't change. Next year, we'll probably see 60 to 65% of all REOs being cash. So next month, we're going to look back and recap 2011 and also look ahead to the 2012 market. See what we're looking at for next year. But thanks for joining us this month, and don't forget to check your homepage for county-wide statistics, and join us again next month as we look back on 2011. Thanks.